Good morning and welcome back to the NWR Virtual Investor Conference. I am your host, Banjo Blake, and next up we have Fertoz. Fertoz manufactures and supplies organic farm inputs and engages in carbon credit generation, calculation and trading for farmers, woodlot and forest owners, and land rehabilitation companies. Their product offerings include rock phosphate in granular, powder, and micronized forms. Partnerships with other organic input manufacturers allow the company to develop product blends suitable for all soil types. Joining me this morning on behalf of Fertoz is Executive Chairman Patrick Avery. Patrick has been with the Fertoz board for over 6 years with a background in industrial businesses. Thanks for joining the NWR conference today, Pat. The floor is yours.
Well, thank you, Team NRW. We really appreciate this opportunity. We've just been making steady progress, and I hope you're as excited as I am over the next 10 or 15 minutes, but we can go to the next slide. So Fertoz is made up of two major divisions: organic fertilizer inputs, which we started about 5 or 6 years ago. The founders recognized the huge growth in organic food markets, went to North America and tied up almost all the rock phosphate leases in the Western North America. Also, we import from Vietnam and supply Southeast Asia and Australia. But about 2 years ago, seeing this environmental, social, and governance trends and CO2 concerns, and we'll come back to this later, but commercial fertilizer is a fairly large source, we founded Fertoz Carbon Solutions. And you're going to see there's a great amount of synergy between the two divisions. One thing that's very unique again is because when we search for rock phosphate and process it, all we do is mine, crush, and granulate. So we have a very small carbon footprint. We also have some sources of organic nitrogen, usually from alfalfa pellets, also very low sources of carbon dioxide. So we're excited. We think there's a lot of synergy for our stakeholders, farmers, our partners in processing and delivery, and environment, and our shareholders. We think we have a very unique value proposition that these two tie together. Next slide, please. We have, when there's been a bit of a slowness in the first couple of years, starting an agricultural input business, one has to do farm trials, gain credibility with the farmer. In North America, we say that the farmer is truly betting the farm. A new fertilizer or a new input, is pretty risky for a year's crop. And so a lot of times people start with a small plot, then grow and then grow. So field trials, we had to pioneer a supply chain in organic inputs. There's a great supply chain for commercial fertilizer, but we had to build it out for organic. And our stock price has been, moderately steady. But I think we've just built what's going to be on the cusp of some exciting things. We're close to signing several very large carbon contracts. You're going to see that we'll have partnerships with some very large corporations. We should be cash positive in 2022. And really, over that 3 to 4 to 5 years, we built a basic agricultural input company and the pluses of trading in carbon. Go ahead. This is our board and key management. We had an announcement recently. We were able to attract Daniel Gleason as our CEO. Daniel's been in agriculture. He's also an Australian, been in agriculture about 20 years, but just has led cutting edge companies, and most recently was the North American head of marketing for Syngenta Seed. The other thing I will just tell you about our board and directors is we're somewhat differently. Now, not everyone is as old as I am, but we tend to attract people that have 10, 20, 30 years of experience. Derek Square, Joe Sheard, Sean Gatton, Wes Sonji, Rianne, we're all very successful in agriculture before coming to Fertoz, and we think that makes a very dynamic company. Go ahead. So organic inputs. As I said, we pioneered looking for high quality rock phos in North America. and really focused on the organic markets. Agriculture, till this year, prices and supply, food products have been about the same price, except organic was growing significantly. So we very much focused on that. And we also, as I said, move fused magnesium phosphate in Southeast Asia and Australia. We're growing in that market. We make a powder product that goes out spin spreaders to field crops like alfalfa and hay and those sort of things. And then we make a granular pellet that goes down row crops, the two most common forms of fertilizer supply in North America. We are putting our own in-house granulation facilities in. We have contracted that historically. But the other exciting thing is because our processes are so simple and straightforward, we actually create about 10% of greenhouse gas emissions compared to synthetic fertilizer. We're going to see how those tie together in just a moment, but we've had to build out our own system in organic, as I said, in supply chain. But now that we've got great partners, very good vendors, again, we think we can grow significantly. Now, the only thing that's interesting about this year, or many things, is all this disruption around the world. Supply chain, Russia supplies an enormous amount of fertilizer globally, Saudi Arabia, Morocco, all those supply chains have changed. We'll take a look at those in just a minute. Go ahead. So as I alluded to, this year, we're on the cusp of significant growth. About 70% of phosphate in North America comes from offshore, Saudi Arabia, Morocco, and Russia. And now with this Russia-Ukraine conflict, there are some bans on that fertilizer, and it's going to different markets, perhaps Brazil or India, but those whole ocean shipping trends are changing. As it says, USA is a net importer of fertilizer. Potash is generally supplied from Canada, and ammonia and urea, from a range of natural gas sources. But the interesting thing is it's driven up the price of commercial fertilizer significantly. So about a year ago, we really started advertising and marketing on, take a look at our product on a price per pound of phosphate basis on the field. Conventional fertilizer prices have doubled and tripled, and that makes us wildly competitive comparing price of nitrogen, price of pound of phosphate. And we're seeing a lot of growth from our commercial synthetic fertilizer customers. So that's allowed us to become more price competitive in blends and straight rock phos. There's a lot of conventional farms and dealers in North America that may not get fertilizer. Either, again, it came from offshore and it can't get here, or the supply chain, trucking and rail, is significantly backed up. And really, we see that in many places around the nation, although our supply to Australia has been steady. Go ahead. So how does this carbon thing work? We supply great fertilizer, high quality fertilizer, but how does this carbon work? And frankly, there's many ways. Some are just changing your farm practices, but many of them are changing your fertilizer practices. So what all companies in the carbon business try to do is reduce inputs that have carbon impacts and increase yield in agricultural crops, or you'll see we also in forestry that sequester and control carbon dioxide. Again, we're one of the first people that started this. As you probably hear, there are definitely some carbon traders out there that buy and sell carbon credits, but we're actually one of the few companies that actually have products that go with carbon trading. We'll examine that, look at that in a little more detail. Go ahead. So as I said, carbon credits are generated from removing carbon from the air. So what we do is we work with fertilizer dealers and growers, and if they buy our fertilizer and they follow farm practices like no-till, conservation cropping, proper rotation, they can gain carbon credits, and we can measure those with our trading partner and science partner Trimble. And so then there's exchanges, then they're traded on exchanges, kind of there on the last bullet. What's been challenging is all the governments are talking about it, and the United Nations and European Union, but the government programs are not particularly far advanced yet. Environment Canada is looking at this, US EPA, and frankly, Australia is ahead of most countries with some very clear protocols and processes. But the regulatory market would come from government, but almost all the world now is participating in the voluntary market as the government programs catch up. Go ahead. So as I said, we're primarily focused on the voluntary carbon market. Sellers of credits to like oil companies, processing companies, transportation companies, search for sources of carbon dioxide. And we provide that agricultural-based solution. We're also starting to work more in forestry and reforestation. So as I alluded to, if we look at protocols, even in the voluntary market, the price you can bring in dollars per ton of carbon credit has a lot to do with your validity, your basis in science. So companies like ours go out and develop protocols. Conservation cropping no-till, we're approved in North America. Nitrous oxide emissions reductions, like those are very high from ammonia and urea traditional. We're waiting to get that approved. Cover crops to increase carbon sequestration. Our years of field trial I mentioned show that crops can grow 10 to 15 to even 30% more with our fertilizer. We use a standard rule of thumb of about 15% yield increase, but that increased carbon sequestration. And then rock phosphate to enhance yield and direct through replacement of conventional fertilizers. So in the industry, there's scope 1, direct on farm and crop, and then scope 3 would be reduction of industrial or commercial fertilizers. We're getting protocols approved in all those areas so we can gain the highest value in our trading carbon credit program. Go ahead. So as I said, we're really providing agricultural-based solutions. I will mention to you, as I said, you develop protocols, but then the real work is in the field, no pun intended. A farmer can't just say, well, trust me, I did it. And a dealer say, well, trust me, we bought the right thing. Measurement, recording, and verification is a big program. If you look at almost any CO2 article, carbon dioxide, it'll have MRV, and that's measurement, recording, and verification validation. And Fertoz is leading in that effort. Again, we've got some great partners in Trimble down below. Bright Spot is a verifier. We're working with them on consulting and validation. So really, when you look, sort of toward the bottom of that, is that way we can gain partnerships with large dealers and growers, educate them on the right farm practices, and then execute major multi-year agreements. A lot of times in carbon credits, you can count the year's yield 1 year back, and then during that year also. So you'll see we've started to sign up large dealers and growers in our carbon program. Go ahead. And then really, it's kind of exciting. Another, just great synergy, the way agricultural, our inputs, and carbon go together in agriculture, but is in reforest and remediation. I'm about out of time, but I will say it's almost logical to do reforestation and forest remediation near our mine sites. There's some big mines, there's timbering, so we believe that'll be a great fit. Last slide. So I won't read this to you. NRW does a great job of NWR of presenting the presentations. But when you look where we are, we really think in the carbon programs, we've got all the protocols in place. You'll be seeing us sign up some contracts of full cycle carbon initiatives. And then on the agricultural side, we're doing our own processing and granulation. That'll improve our margins. And we're selling to both organic and conventional growers and dealers, and conventional was growing significantly. So with that, I'd be glad to take any questions. I appreciate your time, and I know we went through this quickly, but I hope you'll see we're building a platform that will be sustainable for many years to come and have interwoven synergy. Thank you.
Perfect. Thanks a lot, Pat. That was great insight into Fertoz and what your business model looks like going forward. Fertoz achieved record phosphates last quarter. How is the fertilizer order book looking for the current quarter? Do you expect this sales level to continue?
We do. I mean, our growth has been very significant. I mean, as I said, 2 or 3 years ago, we got our field trials done and we started to grow. And frankly, COVID disrupted a fair amount of supply chains. I mean, I'll be quite candid, like the Canadian-US border has a vaccine mandate. Drivers have to be vaccinated. We had to face mask mandates. We couldn't visit customers. Also true in Southeast Asia and Australia in our markets. So coming out of COVID, not only do we see growth in general, but this disruption of commercial fertilizer globally, we're getting calls almost daily by people that can't get fertilizer. So we think the growth will be significant this year and in many years to come.
And how quickly could you start monetizing carbon credit sales?
And I'm sorry, I'm in North America. You broke up just a little bit.
How quickly could you start monetizing carbon credit sales?
And that's a great question. And as I said, we actually announced one carbon contract with an agricultural consulting group in Canada, and we have about 6 out for review. So you'll see carbon credit revenue this quarter, certainly for first half of 2022, and then continuing. And you'll see a fairly large quarter in the fall in North America as crops come off and we measure the yield. But you'll be seeing carbon revenue certainly first half and large second half of this year.
How is the competitive landscape looking in North America? Given rising transport costs, does your geographic footprint give you a competitive advantage independent of the quality of your rock?
Yes. As I said, I mean, there's no question, because the fact that we can run our own supply chain from mining, processing, we contract those steps, but we control the whole process. And so, being the primary provider of rock phosphate, again, we also contract crushing and screening and granulation, contract transportation. But again, we help the customer with every one of those steps. We go out to a number of people for competitive bid. But as we've heard, the supply chain around the world in North America, labor has increased, cost of freight has increased. Every step of the process has increased, but we're still, we took a price increase. I think we'll see very attractive margins.
You've recently appointed Daniel Gleason as CEO. What does he bring to the company and how will he work alongside the current management team?
And I'm so sorry, you broke up terribly for me.
No problem. I'll repeat the question. You've recently appointed Daniel Gleason as CEO. What does he bring to the company and how will he work alongside the current management team?
Oh, great question. And we're so excited about Daniel. As I said a little bit at the start, he has just an extraordinary background in agriculture, starting in Australia, working in Southeast Asia and Europe. And then, as I said, head of marketing for Syngenta North America. He just brings new energy and a way, and a new way of looking at things. I mean, he's bringing kind of the best learning and education from his background, but bringing it to a small, nimble company. I don't think I'm giving anything away, but Daniel said, I just want to be in a more nimble, smaller company that we can change things every day. Candidly, we need to grow our sales in the United States significantly. We pioneered a lot of our work in Canada because that's where our starting mines were. But we're going to grow significantly in the United States. And Daniel will bring that growth in United States sales in fertilizer and also grow, helping globally coordinate our carbon programs. He'll be a great addition.
And time for just one more question. The presentation set out a number of goals the company has set itself. How many of these do you expect to achieve this year? Yeah,
we really spent a lot of time on those goals. And again, we were coming out of COVID, and I'll be quite candid, we we listed goals to be cash positive for the year. I think the math is fairly straightforward. That takes about 18 to 20,000 tons of sales, be cash positive. Sign up carbon partners and generate carbon revenue. But I would say based on what we've seen the start of the year, again, there was some pretty long winter in North America. It's actually still snowing in some states. We've slowed down a little bit, but based on our sales, first 3 or 4 months of this year and carbon contracts, we're well on track to meet all those goals.
Perfect. Thanks a lot for your time today, Pat. Appreciate your insight into Fertoz and where you're going moving forward.
Thanks, Tim, NWR. I appreciate it.
Thanks.